Want to trade successfully? I've got proven strategy and powerful indicators that can help. You'll see those tools in action during a real-world backtesting session. So let's jump right into TradingView and dive right in. Now it's time to unleash the power of indicators. Venture over the Indicators tab and let's track down our first weapon of choice, the pivot high-low line. Alrighty, you've got the pivot high-low line indicator on your chart. Time to make it your own. Go ahead and play around with the settings to match your trading vibe. Just look for the little gear icon and click on it. That's where the magic happens. Don't sweat it. It seems like a lot. Take it slow and find what works for you. Alright, now it's time to add the second indicator to confirm signals, as relying on one isn't wise. Let's jump back to the Indicators tab and click on the search bar. We're looking for CM Ultimate MAMTF indicator. Quite a name, huh? But don't worry, it's a great tool. Alright, now that you've added the CM Ultimate MA indicator on your chart, we need to fine-tune its settings to make it optimized for our trading strategy. So click on the gear icon next to the indicator name and the setting window will pop up. Don't worry, we'll do this together. Great work so far. Now let's understand how these indicators can help you spot trends and make better trading decisions. The pivot indicator is like your trusty sidekick, identifying swing highs and lows and drawing pivot highs and lows for you. Next up, the ultimate indicator, which draws two key moving average lines on your chart, the MA50 and MA300. These lines are essential for trend identification. When the MA50 line is above the MA300 line and the price candles are above both, it suggests a bullish trend. That's when the market is on an upward swing. On the flip side, if the MA50 line is below the MA300 line and the price candles are below both of them, it indicates a bearish trend. That's when the market is heading downward. So if you notice that the price is sandwiched between the MA50 and MA300 line, it's best to hold your horses and avoid entering trades. We call this the no trade zone because the market isn't decisive and there's no clear trend to follow. Combining the two indicators, we can create a solid trading strategy based on the following guidelines. For buy trade, first confirm the market uptrend by ensuring the MA50 line is above MA300 and the price candles are positioned above both of the lines. By trading in the direction of the trend, we increase the possibility of successful trades. Next, locate a significant pivot high line on the chart, which acts as a potential turning point for market movements. So, once the pivot high line has been patiently await a bullish breakout that signals a possible continuation of the upward trend. After the confirmation of the bullish breakout and the candles close into a buy trade. And to manage risk, set a stop loss order at the most recent swing low, offering a logical exit point in case the market moves against the trade. Finally, determine a profit target using a risk-reward ratio of 1 to 1.5, ensuring that the potential gains outweigh the potential losses. And when applying this strategy for sell trades, consider the following factors. First, ensure the market trend is downward by verifying that the MA50 is below the MA300 and the price candles are positioned below both. This approach increases the likelihood of successful trades by aligning with the trend. Next, identify a significant pivot low line on the chart which acts as a potential turning point for the market movements. Once the pivot low line has been established, patiently wait for a bearish breakout that signals a possible continuation of the downtrend. After confirming a bearish breakdown and the candles close, enter a sell trade. And to manage risk, set a stop loss at the most recent swing high, providing a logical exit point if the market moves against the trade. Finally, determine a profit target using a risk-reward ratio of 1 to 1.5, ensuring that the potential gains outweigh the potential losses. Now, let's take a peek at the trailing backtesting results that shows how the strategy performed in action. We're taking BTC USDT pair, 15-minute time frame, and a risk-reward ratio of 1 to 1.5. Out of 100 trades, the strategy nailed with a 69% win rate and eye-popping total profit of 104%. But wait, there's more. Over 7 weeks of backtesting, we had an astonishing streak of 8 consecutive wins and only 4 losses in a row. And if that's not impressive enough, let's talk profit factor. A whopping 3.35. That's like getting nearly 3 times the reward for the risk you take. And the max drawdown? Just 2.97%. A small price to pay for each impressive gains. Now that you've seen the incredible potential of this strategy, why not give it a shot in your own trading? With dedication, practice, and a dash of luck, you could be the next success story. So go ahead and make your mark on the world of trading.